Good morning, everybody. This is Johnny Seville. This is your executive summary for stock setups for today, Friday, the end of the week of the first week of July. Well, technically the second week, I guess. I had to think about that for a second. Anyway, we are, of course, the important thing this morning is the jobs report, which we'll have at 8:30 Eastern before the market opens. So we'll have to look at what those figures look like just prior to the open. That could cause a big bearish open. It could be we rally straight out of the market. I mean, we'll really have to look. Right now, the S&P 500 is still closing below open range. So we're still in bearish open range territory. The futures currently we're about 2.5 hours away from the open. Futures are currently up about 5 points, but again, no real action, of course, ahead of the jobs report. The DAX is up, the Asian markets are down. So again, a lot of really consolidation in the market at the moment as we hang beneath this resistance level as the market waits for the next break to make its move. The volume's kind of been pattering back and forth, about 3.6 to 3.9 billion, kind of in either direction. So nothing really to write home about, but beautiful movement, of course, in a lot of the individual stocks, and that's really where we want to be focusing. Of course, on the short side, something that I'm still holding short from our alert earlier this week, VDSI has continued to drop really nicely. So I'm happy about that. Of course, the key thing I'm looking for now is a drop below the support line. I have lowered the stop loss to my entry price. So at this point, it's a free trade. So if it doesn't work out, unless it gaps, I'm not going to lose any money. So it's a pure profit from this point on, which is what I like. So VDSI, wanting that now to drop below that 15 mark will be the next key indicator, but you can see this money flow is just terrible, which is good for a short. So I'm liking that. SGY, of course, we talked about raising the stop loss yesterday to 15.53, and which we sent out via text message. If you are not getting the text messages for any reason, it could be a problem with the provider, or it could be a problem with the way your number is input into our system when you first enrolled, or maybe you didn't provide a text message number. So we're going to be sending out a form next week for people to update that, and obviously do our best to make sure you get those. But SGY, regardless, even if you didn't sell it yesterday, still awesome. up from 11.50 where we'd alerted it 2 days ago to 14.70 was the close yesterday, and then we've got and there's still strong momentum behind it. Remember, our target is in the $18-19 range, so this could still keep pushing. So if you're still in, no real problems there, but certainly hit a target there for about a 40% rally over 2 days. So we're really happy with SGY. MDCO, of course, one of the alerts earlier this week, waiting for this to break down. It's still just kind of channeling, as you can see here. If this breaks down below, really kind of below the low of this candle, or 33.43. So I think the entry criteria we're looking for was 33.33, and our target was 30.33. Again, we're still waiting for that, but it's just oscillating underneath this resistance. So that will be a short still in the making. ZBRA, and by the way, we do have some new ones today, so stick around. They look pretty awesome. So ZBRA, this one is underneath the trend line, just testing it from beneath. So this one's looking good. That, of course, was one of the new shorts this week as well that we alerted you to. FCSC, this one's yet to break out. This again was earlier in the week. It hasn't yet broken through its trigger. I have a pending trade waiting to be filled on this one, and I think so we're waiting for a break of 133 on that, which we haven't had. So again, just kind of waiting to see if that triggers. It may not trigger, and of course, we have Red Hat. This one also not triggering yet, just kind of just moseying over to the side, and it could have triggered actually. We were looking kind of an area of around 30.24. The high yesterday was the 30.32. I'm not in that for some reason though, but but basically I'd still be waiting for a break really above this above this high of this candle, still 30.34. It's still okay. It's still at support, which is fine. But I would wait for that break of the high of this candle. Really, 30.34 is what I wait for the break of. Looking at a target of 34.83, stop loss 28.13. So that's not triggered yet for me. I might have my entry criteria written down wrong here, but yeah. But I wait for that break of that candle. But otherwise, it's just sitting on the moving averages right now. There's probably a little bit of consolidation again. This should have performed better, so I would wait for the breakout as a new potential trade with a bit more confidence and a bit of volume on that trade to actually occur. Okay, so let's have a look at some of the other existing positions. ENDP, or existing alerts. ENDP is something that's just kind of squeezing along. It had some really really interesting moves here the other day, the last couple of days. Of course, we're waiting for a break of 1807. Hasn't quite yet breached that, but the money flow is looking really, really good. So again, keep this on your watch list. Also, another one that's looking really, really good is BGCP, one of the shorts that just hasn't had any steam from the market. It just continues to break down, and so that's looking good. The target on this is $7.13. It's well into the profit now, so that should be really juicy. And one other thing I wanted to update you on is PCAR. This one has definitely dropped significantly enough for us to consider updating the stop criteria on this. The stop criteria is above 55 at the moment. I would bring this down to 53.84. Okay, so we've got plenty of shorts, and we've got some really nice longs as well. Given the market conditions, the only thing I'm kind of really looking for is this really high probability, potentially high probability, fallen angel type flags, these types of very dramatic bull moves to take advantage of the some of these short squeezes and just basically lower price stocks that are doing their own thing that don't look like the market. I found a couple that I'll be looking at as potential trades today. OCUL, which is one I've actually already had on my watch list. This had a nice move up yesterday of 4.3%. It's right underneath that moving average. So I'd be looking at a break of 557 on this one, which is a break of the high of yesterday's. It's a buy stop order I'll be looking at with a target of 643, which is where this you can see this shelf of support is. Now you might say, why not go here? Why not look for the higher price? Well, basically, if we have a look at the volume in this, you can see kind of where volume just got squashed. The wider the candle, the bigger the volume. So big volume. Basically it starts to thin out, and then it finally kind of breaks down below that 650 area. And so that's kind of why I was looking at this particular price, is that's kind of where that shelf is, and that's where the next big downward decline happened from, is when it broke that. So I'm expecting to see some resistance. And in these markets, I don't want to be greedy. I don't trust any move, long or short, right now. I think it's all as manipulated as it gets. So, but that still means the technicals work, but it means I don't trust moves to last as long as they normally do when we're in this consolidation period. So that's the reason for being protective on things like SGY, and the reason why I wouldn't look for stupendous gains on short-term trades like this. I mean, a lot of trades like this may only be things that get in and out of within 1 day or 2 days. So here's one. So this one I like. So yeah, break of 557, target 643. Stop criteria I'd use is 493. So it's about a 10% risk there. So in these positions I'm talking about here, they are higher risk from a stop loss standpoint. Typically my stop loss is more around 3%. So basically I'm risking 3 times more than my average stop loss, right? So what that means is in each of these positions I'm going to invest a third of what I would normally invest when I have, say, a 3% stop loss. So let's say that you invest normally 10 grand, then I would invest 3. If you invested 100, I'd be investing 30. If you invested 3, then I'd invest 1. You see what I'm saying? Like or something around that. That's my approach. I'm just giving you some ideas. Of course, it's really up to you. We're not here to advise on that, but that's just to give you an idea of how, when we have a larger stop loss, how we factor that risk into the capital allocation decision. Let's have a look at SPAR. Now this is a flag reversal, so massive volume up on 2.06 million shares on Wednesday, and then we came back down on 747,000 shares. So I really liked that. And if we have a look at the 15-minute chart, you'll see this is just curling up, and looks like it could be on a rally back up. So I look at this as resistance as a profit target. Could go higher, and I look at that throughout the day. But I look at this as a break of 674, so breaking the high of this candle, and I would be looking at a target of 716 with a stop at 647 to begin with, which is underneath this support. But as soon as that starts moving up, I then push it up to 654, which is under this support level, which you can see there on the chart. So that tightens up the risk reward and lets the trade run. And as that rallies, then I would move that up and possibly allow this to run further. And if it's looking really bullish, it could get all the way up to 740, could go higher, but that's basically how I would manage the trade. I'd definitely still at least have a target in mind, because let's say if I want to step away from the computer for an hour, want to go to the gym, I've been up since 3 a.m. doing research, so maybe I'll have a midday nap, whatever it is. We're going to need to have some strategy protecting us. So there we go. And last but not least, this was a peculiar stock that I found, and it may not be the appetite for some people, but I thought I'd share it with you anyway because I got excited about it, and I thought it was going to be a really fun day trade. Now this came up on a my kind of really speculative fallen angel scan, and I wouldn't have looked twice at it except this massive money flow divergence. I thought, what the hell's going on there? And there's these days where it has 10.6 million shares trading, 3.4 million shares. It does these 60% rallies. It went from 3.4 million shares on Wednesday to 27 million shares yesterday, and there's no news at all that I can find on the stock. So I tried to look for an upcoming FDA announcement. I'm still going to keep looking. I haven't been able to find anything yet. But there's no upcoming announcements I've been able to find yet. And there's no news. So I thought, well, yeah, okay. I mean, let's have a look at the hourly chart. Let's have a look at what's going on. And as you can see here, we've got a few different things. But you can see we kind of had this bump and run formation. We've got the downward channel, drop, scoop, rally, and then this is where the volume kicks in. We go from 856,000 shares there to 1.8 million and create a flag within a bump and run formation. And that flag breakout could be a nice. We don't quite know yet where the breakout, what the flag looks like yet. I'm just speculating that it's going to be something like this. But then if we see this push through this trend line and kind of go up to 41 cents, yeah, that could be a really nice rally. Say 41, 42 cents could be a really nice rally up to about 55, 56, 57 cents, which would be a 39% gain from where we're currently at. So I like this as a speculative day trade type of thing. This is what I'm going to be looking at, and will very likely trade unless we see something completely change at the open. Again, we still have to wait for the numbers in the jobs report to see where the sentiment might go for the market today, but this still looks exciting. It still looks like it's doing its own damn thing regardless of the market. So I'll either look at buying that as it breaks through, or I'll look at buying it possibly where it pulls back to 35, 30, 34 cents on this trend line and snag it there. But either way, something that I would then be looking at a push and looking up at that kind of 55, so like looking about, say, 54 cents, just to kind of go under that psychological barrier of 55. So 53, 54 cents is where I look at that. But obviously I'll be monitoring that as more of a day trade to see if I can juice some more out of that trade. But I would certainly start taking some profit around that area. So yeah, there's some technical analysis for your morning breakfast to munch on. And again, these are just again, when I've been stressing a lot capital allocation So I'm going to put together a lesson on capital allocation and risk management for the Oak Club, to help people try and understand these things better. Because really, no matter what trade you take, you should never be positioning yourself into something where if you lose, it's a loss you can't handle, that hurts you. If I take a loss, it's like, oh, okay, next trade. But then but the win is maybe 3, 4, 5, 6 times that loss. So one win should account for 3, 4, 5, 6 times what you lost on the previous loss. That's really why losses should just be, it's kind of like driving down a highway in a Mack truck. Little flies are going to bounce off your windscreen. They just wipe them away. I mean, that's kind of like, your strategy should be your Mack truck driving forcefully down through the market highway, to use that analogy. And as the little losses that get in your way bounce off you, you wipe them away, and then they're behind you. And unless you run into a massive boulder and it puts a huge crack in your windscreen. So don't position yourselves into trades where that loss could be a boulder in your windscreen. And that's my little rant for the morning. Again, have a wonderful, happy day of trading, and we'll be seeing you throughout the day with any updates that we come across. Otherwise, have a great weekend. Take care.